presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate your growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show right here on TFNN. We got a lot in store for you today. We're going to be joined by Basil Chapman in the second segment, and then Tim Ord in the third and fourth. Let's take a look at what we got going on in the market today. The composite off about 0.37%, trading at 19,663. The Dow Jones Industrial off about 0.02% at 44,391. Let's see, you got the SPY trading off about 0.23% at 603.31, so a little bit lower than yesterday. The DXY still getting kind of strong right now at 106.40, up about 0.21%. You have crude oil staying pretty flat at 68.43. The gold contract is very strong today, up 1.21%. Looks like it's going to try to go for this level here around 2,717, trading right now at 2,718. So very nice. We're hitting right around that level right now. And of course, we are going to have Tim Ord on today. You had, I don't know, how are the miners doing? Let's look at GDX. Only up 0.27% today at $38 at least for the GDX. You have silver coming off a little bit at off about 0.1%, 32.58. The Russell's flat, 2003 at 98. Let's see what else we got. Copper off 0.18%. Tesla moving super high. Elon Musk joking that Bill Gates is going to go broke on shorting Tesla. It's just hard to do it. I don't like it. I talk about it all the time. I would never short Tesla. There was some news on it. We kind of go over that a little bit. I think it was, when Bank of America had a super optimistic outlook regarding the Austin super factory. I mean, who's to say that really drives something 3.17%? People just want the stock to go higher. I mean, it is just moving. Let's see, regarding kind of electric, you have Lucid off 7.5% today after a pretty solid day yesterday. I'm assuming the same is probably the case with Rivian, off about 3.18%. Trading right now around that $14 area, traded almost right to the $15 level. They had a price target upgrade to about 18, which is right under the highs that it made July 12th. Still probably have some issues with that company. Let's take a look right now at Vuzi. Okay, some solid movement to the upside today. Up 13.90%, trading at 309. So it did easily move past that high of $3. Short-term high. This thing has been higher for the past. Regardless, this is what it's doing. I still think they have sales issues. This is chasing all, just new highs on pretty low volume. So I can definitely see kind of a pullback with Vuzi. I am in at Vuzi, kind of below this level, around like 270. Because I do think, although I don't like the fundamentals of it at all, I think getting those new orders are pretty fantastic. We'll see if they can have some better kind of forward guidance on their next earnings. Until then, this is going to get played. I'm concerned that you can probably get a dump around this level. You have a massive wick on both ends here. There's a lot of sellers and buyers in this stock right now. So we'll see what kind of happens with it. But trading up 13.19% at 310. And again, I like the AR. I think it's fantastic. But the company has been having issues. Trading right now at 229, at least on the market cap. Let's take a look right now at Mara Holdings. So off 4.04% today. I still don't get, this is a little bit different, right? With Mara, at least mining to some capacity, but I'm not understanding why, again, Mara and things like MicroStrategy. I mean, MicroStrategy just bought more Bitcoin, right? And I just don't understand, again, the premium that we're paying for this at all. I can see a future where they start lending against it, which I think is kind of a cool discussion to have. But who knows if that's the case I don't. You look it over at Mara. Let's see. They're doing the same exact thing that MicroStrategy is doing, which is their 0% coupons, convertible bonds, which is unbelievable. Let's see here. What did they buy? Bitcoin yield was 12.3%. Bitcoin yield is now 47.6%, which is great, but it's not exercised. So, you're not getting any money from that at all. Microsoft also is trying to get memed essentially by Saylor into buying Bitcoin, and they refused to do that, which is a little bit unfortunate. So, what did he say? Yeah, told investors of the NCP PR intended to submit a shareholder proposal recommending that the software's company's board look to diversifying its balance sheet with Bitcoin. He was presented this at the meeting. It fell through. Kind of unfortunate for them, right? There's still that kind of law going forward, that bill going forward in Congress to see, but I just don't buy that MicroStrategy or Mara need to be trading at these kind of levels because it's just so much higher than the net asset value, and it's not currently generating any actual cash flow, right? I think a lot of what's going on, why you probably wouldn't want to short something like MicroStrategy, even though it kind of makes sense, is that it's the image that it has in the public is going to be one where you just keep buying it. I mean, it's tied in with Bitcoin itself. Obviously, you had a lot of shorting going on right up here, and that kind of made sense. It really went out of control, but it's still at a massive premium. And again, keep in mind, you're buying it, you're keeping it at this 371 level. The more that he buys, the more your ownership of Bitcoin gets diluted, essentially. Or at least the amount of Bitcoin price-wise that you own gets diluted, and that's a massive problem. And I haven't heard anything from Saylor saying that he wants to start monetizing this, meaning, giving loans out against it. You look at other Bitcoin holdings that, JP Morgan has or whatever, that is directly correlated, the ETF price is directly correlated with the value of Bitcoin that's held inside. So that in and of itself is the issue, but it's probably not going to go much further down because I think a lot of people, like guys have been saying, you want to get into Bitcoin, you don't know how to do it, you're just going to buy MicroStrategy. So what everyone says, that's probably what's happening. And so you can really stay at these elevated levels for a very, very long time. The only way I see MicroStrategy ever getting cracked, right, is that you have a massive depreciation of the value of Bitcoin, like there's a massive sell-off or something like that. This goes down with it, but it just seems untethered right now. The market cap is untethered to the value of Bitcoin that it holds. So that is a little bit strange. Take a look at Big Bear AI as well, off 15.71% today. Again, you're pushing massive highs on actually pretty good volume as well. It's probably getting a sell-off. We'll see what happens with it. I don't know when you have earnings coming up. When was this? On 11:05. So you still got some time with it. Still think it has a lot of potential going with it, but again, one of my big fears that I have with the stock is that you have so much insider selling going on. That's kind of my at least wrap up for the day of what I've been looking at. When we come back from the break, we're gonna have Basil Chapman on. I know he's got a fantastic presentation for us, and then we'll be joined by Tim Ord of the Ord Oracle. Stay tuned for Basil.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shue. You're watching the Tom O'Brien Show. Now, every Tuesday, we are joined by Basil Chapman. If you look over on my screen here, we're on TFNN.com. Going to go to the newsletters tab. You scroll down here, you get the opening call newsletter by Basil Chapman. This is a fantastic newsletter. He updates it every day. Has a nice long form kind of video that he does on Fridays. Very well worth it. He called me actually on Friday asking a tech question, and he had done it like an hour-long video. The value added, as I say, is just immense with that. Additionally, when you subscribe to the Opening Call newsletter, you get access to Basil Chapman's just a host of live webinars that he has done. These are for subscribers only. The most recent one he did was about 90 minutes. It was Thursday, November 14th, so you've still got time. It is still very pertinent information. Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well. What are we taking a look at today?
So a couple of things. First of all, I discussed with you for some time now, I always say in the Chapman Wave methodology, the idea is to identify the lowest low bar, count each successively peak. Yep. If it gets upgraded from a buy signal to a buy mode, it should go to at least 4 higher peaks. It can go higher, but the objective is to get you to that 4th highest peak. And then you reassess and see exactly what's going on. Well, the Dow went to a peak C. So we were speaking last week. I said, well, it's getting to a leg C, and I'm anticipating that there should be a D. Well, it went to 45,073 on the 4th of December. And since then, it's had just slightly lower lows, but it hasn't gone to that even close to the 45,000 high, that 45,073 high that was made. So what's interesting is that when you go to the S&P, this is the daily chart on the left, it did go to that D 3 sessions ago at 99.97. If you go to the QQQ, it went to a D, right? That 4th highest peak 3 sessions ago. The IWM went to a leg E, but if you look at the monthly chart, it made a D at 244.46 in the monthly chart back in November of 2021. Pulled back very sharply to the 161 area, did a kind of a triple bottom in October of 2023. It did 161.47 and then ran up to where? A leg D. And the month, you have to wait for the month to finish for the bar of the time sequence you're looking at to conclude before you can say it's a peak or whether it's still a leg up. And at this point, it's still a leg D, but it went to what? 244.98. Less than 50 cents away from an all-time high that was made in 2021. So I'm watching this very closely. So waiting for that D in the Dow, I just wish that there was a way that could have counted it, because if I had the D coinciding with all the others, then I could have immediately said, okay, now we just on a short-term basis, that's all I'm thinking, because the monthly charts and the weekly charts are still very strong. Let's start some kind of a short position, and I will just see where it goes, because that's normally what we do at the D. Well, I've waited and hasn't yet done that. I thought today, if the Dow was even up a little bit, up 40 or 50 points towards the 3 o'clock to 4 o'clock time frame, that would be good. But what I'm frustrated with is that 9-period moving average is still very strong over the 14. And that to me that's a sign of internal strength still. So I'm anticipating there is a chance now. We're still long from way down. So we're in no rush to actually exit here or even to go short the Dow. But the others, that's a little different. So to coincide, what I look at throughout the period that I'm starting to anticipate, and for my subscribers, last Thursday in the morning when I sent out my newsletter, which I do every day, I said, today we're going to take a little bit off all the stocks all the positions that we've got that have had really good gains. And some of them we got out almost, look, for instance, here's Hood. We've been talking about that for some time. It went to a leg E right there on that day. So we took some off. Actually, we got the 42.76 is not even the price we got. We got it pre-market at 43, just over 43. So we try to time these things, and so far we're still keeping our core long position, but we've been taking a little bit off in most of these. And I'm also looking at AIQ, which is the Global X Artificial Intelligence ETF. Here in the monthly chart, you can see we went along just as it broke this trend line, this in the under 30, and it hit 40.65 at peak D. So we've been taking a little bit off all of these stocks in their Ds and Es. And so we've raised cash. That's number one.
Yep.
Number two is I've been looking, and I said to subscribers, we're going to look to see whether or not there are round numbers at highs, because that's always a clue. That was a clue in April when the semiconductors and some of the tech stocks were just making oodles of round numbers. For instance, you just spoke about MSTR.
Yes.
So look at this. This is MicroStrategy Inc. A shares. Back in 2024, it made a round number 200 high at a peak D, pulled back sharply, took 6 or 7 months before it broke out. And what did it just do? On around about the 18th of November, it went to a 543.00 round number high. And look how it's struggling. Down, that was at 543. Here it is at 376. So I look for these. And in fact, in my show this morning at 10 o'clock, I went, look at this. Yes, Berkshire Hathaway, BRK.X. This is the .B. This is the B shares. All-time high on the 27th of November, 491.67. Oh, wait a minute. It had an intraday open of round number 481, and it's trading here at 463. So I like to put this all together to say, okay, now we're starting to get, one of the reasons why we've raised cash is on a shorter term, I've been expecting some kind of a digestive phase. So that's unfolding right now. I don't see anything yet. I know I can look at charts all over the show that are in different forms that have been shown either on TV or in print that show you with investors' intelligence, there's the highest number of lay folks buying stocks.
Right.
But I look for many other things before I get what I call a major top. And that is, I like to see the brokers not only just scream to all-time highs, and the IAA, which is the iShares Broker Dealer ETF, we're along from 45, it hit 154 about a week and a half ago. I look for that area to become not necessarily hysterical, but for just, you keep reading that people are flocking to these brokerage houses and they are buying and buying. And even if you look at Hood, Robin Hood, you can see that, yes, it's gone up very sharply. If you look at the monthly chart, but I don't see anything yet that represents the kind of major top that has been purported to be unfolding, I just don't see it. The characteristics that I do see a short-term top. I do see one of the reasons why we've actually implemented a short position just an hour ago. And I think that we've got to be looking at many other aspects. For instance, you mentioned Vuzi, and we spoke about this the other day. And remember, I was showing you in the Chapman methodology, you get a buy signal that should go to at least a peak D. And look at this. You've got Vuzi in leg D today. We spoke about this last week, and there it is. There's your leg D. So I just thought I'd demonstrate some of the techniques and to say, yeah, we are cautious. We're expecting some kind of a pullback here, but I don't yet see anything that represents a serious dump.
Basil, thank you so much. We'll see you tomorrow morning, 10 a.m., okay?
Thank you very much.
Folks, we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Now, every Tuesday, And Thursday, we were joined not only by Basil Chapman, we were also joined by Tim Ord of the Ord Oracle. If you are not familiar, you've got to get familiar. You can go to ord-oracle.com and check out what Tim has to offer. He has a newsletter, he has the book here as well. Additionally, you can go over to TFNN.com, and now that our domain name server is working, you can go right over to the services tab and get the secret science of market tops with Tim Ord and the 6 secret ratios every trader should know as well. These are fantastic. And, I keep talking about that. I think we're getting to a point, Basil's saying digestive phase, could totally see that. I think there's so many people in the market that we might see some kind of pullback around the inauguration. I think it gives it kind of a good nexus point. Well, you can also check out this webinar, The Secret Science of Market Tops, and it'll tell you how Tim determines whether or not we're in a top pattern or we have more room to run. Tim, are you with us?
I am. For some reason, my camera's not working and I don't know why. So, worked yesterday, but now it's not. So
all the tech problems, right, Tim? It's supposed to make our lives easier, but it makes it always harder somehow.
Yeah, it does. So,
what are we looking at, Tim?
We got sound. So let's take a look what's kind of going on here. So we can go over to chart 1.
Yep, I have chart 1 up right now for us, Tim.
Okay. This is a lot of stuff is not really going on here. The market is kind of in a doldrums, but actually I think it's building some energy to get the next rally going. But anyhow, this is my what I call a panic indicator. Anyhow, panic always forms at bottoms, and there's different methods to find panic. You can use volume. I like to use a trend readings of 1.2 or higher is bullish. It shows panic. It shows volumes going in on the down stocks, and that's usually a bullish sign. So if you don't have panic, you don't have a bottom. But anyhow, the bottom window is the 3-day average of the trend. Next higher window is the 2-day average, and the next one above that's 1-day average, and the top one is the 10-day average. And as of today, we're coming in right around 1.109. Yeah, I like to see the 10-day up around 1.2. So we're leaning bullish, not ideally bullish, but we're kind of into the holidays too. So some of the energy, I guess, volume is kind of out of the market right now. So I'm not really thinking that this is a top of any consequence. The reason why, because the 3, 2, and 1-day trend did reach bullish levels here several days ago, going into the recent high. And since then, the market is kind of backed off of the last couple of days. We're off about I think 0.42 yesterday. We're off 0.37 right now. We did test the gap on lighter volume. That's usually a bullish sign. But anyhow, this chart 1 here is leans bullish, I guess. It's not really bullish. I think it'll need a minor pullback to get the trend up. And I notice the trend right now is coming in at 1.13, leaning a little bit bullish. So let's flip to chart 2.
Sure.
So chart 1's really not saying anything real bearish, but it leans bullish. It's about the best thing you can say about it.
Right.
This next chart looks at the little bit bigger time frame. The bottom window is the VIX. Next higher window is the SPX-VIX ratio. And then one above that is the weekly SPX. And we did have a bearish divergence started back in actually August, September of this year, where the S&Ps were making higher highs and that ratio is making lower highs. And I noted that with a light pink area. And I thought we were getting a pullback possibly into the election. That's what I thought was lining up here. But turned out not to be the case. We kind of kept on going higher. And finally, the times we noted in green here over this chart goes back a couple of years where it's a bullish divergence where you have the S&Ps basically matching its previous highs and the ratio is making higher highs.
Right. And
that's a bullish sign suggesting the continuation of the rally. And so we kind of went to bearish to bullish where the S&P started making higher highs and its ratio also started making higher highs. And that's to the far left here. So that bearish divergence flip didn't work. flipped back to now we're actually bullish divergence. And if you look at the bottom window here, the trend's really low. It's around 14. Normally you get around below 16, 17. A lot of times that's kind of a trending market. So I'm thinking we're probably, even though we'll see some minor pullbacks, nothing, I don't think, is in the cards for a major pullback here. I think it's kind of a doldrums. We may drift lower for a little bit, then probably turn around and drift a little bit higher. But intermediate term wise, this chart looks good. Not every day is going to be an up day, but there's nothing in the cards here for a major high forming.
Okay.
So either the trend's not ideal, but again, you get the holidays, you get the VIX actually bullish divergence, showing higher highs along with the S&Ps. So let's flip to the short term.
Yes.
Which is chart
3 we got up.
3 here, kind of seeing where we are. I have a top one, I got a blue shaded area on top there, the blue circle, and that's kind of where we are right now. And I wanted to show you, I have some dotted trend lines, or dotted up and down lines going through there. And we had a gap. I kind of pointed out that gap, and we're actually through the gap a little bit today. But normally you can test the gap on lighter volume, which we did yesterday, significantly lighter. That's usually the gap has support, and we kind of passed through it today. But ideally, we'd like to see volume lighter today than yesterday. If that's the case, then this is just a mild consolidation. And also, I pointed out on the chart, in red, I have the trend and tick readings. This is basically late December or late November, early December. I pointed out the ticks and trend readings close of those days, and we had panic in the ticks, and we also had panic in the trends on those couple of days, all right around that 600 level on the SPYs. So I thought we may pull back down to that support, which is also the previous highs of early November. So we got panic as we busted through that line, which is at 600, which is bullish. That's what you want to see, panic through a resistance line. And sometimes you pull back to it, and you should start seeing panic again as you approach that 600 line. And panic again is that trend up around 1.2 and trend readings minus 300 or so. And if you look at the trend and ticks right now, we're minus 247, which is leans bullish, and we got a trend 1.19. So we haven't even quite got there yet, and we're starting to see panic. So this is a mild consolidation and an uptrend.
Fantastic. Well, Tim, stay right there. Folks, we'll be right back with Tim Ord of the Order Oracle right after this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. We are joined right now by Tim Ord of the Ord Oracle. Again, strongly recommend checking out ordoracle.com. That is ord-oracle.com. You can check out his newsletter and his book there. And additionally, you can go right over to the services tab of TFNN.com. Talking a lot about, are we in a top right now? What's going on? Check out the secret science of market tops. Of course, Tim, what you're saying is look like we might be in a minor consolidation phase in a bullish market right now.
Yeah, that's what is showing up. So anyhow, that's the equity market. Let's take a look at the gold market.
Let's do it.
This is an interesting chart, Chart 4. This chart goes back to, looks like about 2000. And so it's a little bit messy, but anyhow, this chart, you have some circles on there. The blue circle is the 16-year cycle for gold, and the red circle is the 8-year cycle for gold.
Okay.
And it works out pretty good. Both cycles bottom back in the 8 and 4-year cycle, bottom back in, looks like, 2000, 2001. Next time they bottom in 2016. Excuse me. That was a big rally. And we had another one recently, and actually it was due in late 2023. Actually, it came in about March of this year. Depends how you want to do it. But anyhow, the eight-year cycle is the bottom now. So now we're going up into the top of the 8-year cycle, which comes in, if you look at the top window there, September 2027. So if the cycles work out right, this rally may last all the way into September 2027. So let's wait and see if that works out or not. So I'm not a big cycle fan, but I like to know what's going on and where they are. And in general, they don't pinpoint the exact lows, but sometimes they come pretty close.
Right.
So, but anyhow, this is back in a bull phase all the way into mid-2020 or September 2027. So we'll see how. We'll talk in 2027. See where we are. So, but on a shorter term basis, I flipped to chart 5.
Sure.
And this is, keep showing it because it's relevant. This chart goes back to 2009, and the bottom window, I think the last time we showed this was our last update or our last show. But is a monthly cumulative advanced decline. That's on the bottom window. The top window is the cumulative monthly up-down volume. So these indicators trend both the advanced decline and the up-down volume for GDX. And markets trend a lot. And so you really need indicators to look at the bigger picture. You need something that trends. You can do price trends. You can do advanced decline trends, and volume trends. So I like the volume and advanced decline trends for GDX because that seems to work the best. We got a bicycle. I think it was eyeball in there. It looks like either March or May or June of this year. It flipped above the mid-Bollinger Band, and that's how that signal's triggered. And both indicators triggered. signals of this type last a minimum of 1.5 years. Could it last all the way out to 2027? Yeah, it's a possibility, because you can see some previous cycles. If you look at the cycle top back in late 2011, the market went from late 2011 all the way down to 2016. So that was, a 5-year decline. Then he had another bearish decline started in 2021, the last 2024. So that was a 3-year decline. The advancing ones that so far haven't really lasted that long, maybe a year and a half to a couple years. So we at least got another year to go on this advance at a minimum. Could it extend all the way out to 2027? Yeah, because if you had 3 years, 2024, so you could get out to 2027. I think there's a good chance you could do that on this rally. So I think this rally is going to be lasting, because a lot of these gold stocks just totally got the crap beat out of them.
Yes.
So normally when that happens, you're in for extended rally. So I'm thinking this rally is going to be I think there's a good chance we possibly get to 2027. The worst case scenario is November, December of next year. So at minimum a year and possibly 3 years.
Okay.
So let's take a look at the short term, see where we are. And I have some other indicators to give buy signal on a short-term basis, but this signal, the bottom window, is the 18-day average of the advanced decline for GDX. Next window up is the up-down volume 18-day average. So it's not a cumulative. It's just advanced decline with an 18-day average. And when both those indicators get below minus 40 on November 15th of this year, both the bottom indicator got to 42.45. Next higher indicator got to 48.45. That marked the bottom. And these indicators, even though kind of they're short-term oriented, usually they're multi-week, if not multi-month. You can see the last time we got a buy signal on this indicator came in early in 2023. And so it did give a sell signal, but I didn't have that shown. But anyhow, these are usually at least multi-month signals. So I'm thinking another rally has started, and I think we'll go well into next year. A lot of times March, for some reason, is a seasonal high or low. So at a minimum, we should rally into that time frame. I think we could possibly do more. But a lot of these signals, when they generate, if you notice, there's a big surge in price. If you look at the last four, you kind of had a surge in price.
Yes.
So far, the surge in GDX has not, even though it came off the lows here, we haven't seen the big surge yet. I think that big surge is probably coming here pretty quick.
Yeah, it would be fantastic. And you're right, a lot of the miners just got kind of hammered. So it'd be nice to see these guys kind of, surge back up, to what traditionally happens. Tim.
Yeah.
Yeah.
So.
Well, I appreciate it so much, Tim. Having you on is always great. These insights are fantastic, genuinely. Again, if people want to get better access to what you're talking about, they can go to ord-oracle.com, check out the newsletter, check out his book, and then additionally, 2 really fantastic webinars. And Tim, we got to talk about getting another one coming up or something like that, because people love these things. So, Tim, thank you so much for coming on. We're going to see you Thursday, all right?
All right. Talk to you then. Thanks a lot.
Fantastic. Folks, yeah, again, if you kind of want to watch what him and I just spoke about over the past 2 seconds, you can go to our YouTube channel at the end of broadcasting today. Our producer is very hard at work getting those clips up for you. If you decide to do that, please consider giving the video a like and giving our channel a subscribe. It really helps us out immensely. We want to continue to bring you great analysis, and that really helps us do it in a major way. All right, let me pull over what I've been looking at over the break, if I can figure it out. Yes. Oh, this is what I wanted to talk about, actually. I wanted to talk about Qubit a little bit, just because I think we're about to go to a break here. Yeah, very quick. Wary of this. People are talking about it in the den. I know I get, more people listening right now, when we have some of the guests on, so I want to say this. Be careful with Qubit. It doesn't seem like everything that they're saying is actually real or is going to materialize. There's a really good report by Iceberg Research. I tried to confirm what they were saying on my own time and did end up with some of the same information. So very strange with it. I know some people are getting into that. Just be wary. Folks, we'll be right back for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We have a short segment. I was joined today by Basil Chapman and Tim Ord. Please go to our YouTube channel at the end of programming today. Our producer is hard at work getting those clips up. Consider giving a like. Consider subscribing to our channel. Helps us out immensely. It is getting cloudy out. That means it's going to get cold tomorrow morning. I missed it by a day. This corduroy is unbelievably hot. Let's take a look at Qubit just real quick before we go to the break. Before we end programming, I just want to reiterate one more time that just be careful with this. Now, the PICs, the photon integrated chips, this is now starting to get analyst coverage in a major way, right? With Jensen Huang saying we can't add any more transistors. We need to make the software better. Let's not even worry about electrons. Let's just move over to photons, and that is getting discussed. Quantum computing seems to be a little baby for that, right? Regarding how the market views it. They are not, at least from what exists, they're not going to be able to have a chip foundry. What Iceberg Research said, they sent a guy out to the location that quantum computing has listed on its website, okay, of where they're going to start doing this foundry, and it is an office building in Arizona State University Research Park. I called as well, and they said, we don't allow manufacturing in this park. That is an office building. they're not doing anything. I dug deeper. They spend $2 million on foundry equipment, which doesn't get you anything at all unless you're doing small little tests, okay? That foundry is supposed to be operational by the end of our Q1 25, so like latest, like March, I guess, right? You got to be careful with that, right? Now, you run the risk, too, that they can say, hey, listen, we have the foundry up and running, and this stock just barrels even higher, and it can kill the short, which that is a massive risk. But, in reality, there's nothing to substantiate kind of this movement to the upside. The sale they had was a very small test sample to Austin University and then some unnamed Asian company. None of their management has done this before. So weird stuff. Just be careful. I know this is getting talked about in a lot of different realms, like getting into Qubit, but just be cautious of it. Folks, thank you so much for joining me today. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien at the Morning Market Kickoff. Take care.